Welcome to Stonk Insights, your one-stop shop for stock and crypto analysis and discovery. In today's video, this is just a continuation for Tectonic. I did go over Tectonic in one of my previous videos, and I did state upon launch that I did want to take a part of Tectonic and just show you what I was going to be doing with the protocol. So that's what we're going to be doing today. I'm going to be showing you exactly what I am doing and how I am using the protocol. Again, it is a money marketing protocol for lending and borrowing assets. So we're going to get into that a little bit deeper. We are taking a look at the launch of Tectonic, which happened yesterday, or today again, I guess, early morning, midnight. We see here it took a huge hike up, and it took a deep dip down. Okay, so I didn't experience any of this volatility here, which, as you can see here, it wasn't pretty. In fact, the Tectonic team, and shout out to them, they put out this message, just encouraging individuals not to take part of the token launch right off the bat because of the extreme volatility. And unfortunately, somebody did buy up here at the top, and if they're still holding on, they're suffering significant losses. Okay, but I'm going to show you how I avoided that. Okay, so let's just start here with VVS Finance. They are the first DEX to provide liquidity for the TONIC token, as we see here at the bottom. You can swap it out for any other token. Okay, so they're doing that. They are also providing a farm for the TONIC token in the form of the TONIC USDC liquidity pair. So we can see that here at the bottom. If you wanted to, you could take a part of that. None of this is financial advice, not even that right there. If you wanted to get into the glitter mines, they are offering you to stake your VVS, and you can earn TONIC awards. Okay, so I had some spare VVS from my Crow VVS liquidity pair, and I just plugged it into here. As you see here, we've already earned some TONIC awards, okay, at a 420% APR. So that dropped significantly from when I first started this. Okay, this was sitting at 6,000%. So obviously, with more people, putting funds into this protocol, the APR is going to fluctuate. Okay, and that's something that you got to expect. So let's just start here at the Tectonic.finance, okay, site. So this is where I entered in, and this is what it looks like when you enter in. Okay, so you have all these markets that you can take part of: DAI, USDT, USDC, Wrapped Bitcoin, Wrapped Ethereum, and a Crypto.com token. I had spare Crypto.com token in my wallet, so this is the supply that I did down here. So let's just take a closer look at what I did. Okay, so they're offering, so there's a supply and there's a distribution APY. Let me just go over that real quick. Okay, so the supply APY is the asset that you're supplying. You get a percentage for supplying that asset. Okay, and I'm getting 1.61% for supplying my Crypto.com token. Okay, but in addition to that, you get a distribution APY, which isn't shown here, in the form of the native TONIC token, and I'm getting that at a clip of 61.7%. Okay, so not only am I getting an APY in the form of Crypto.com, that's directly to Crypto.com, but I'm also getting an additional APY of 61.7% in the form of the TONIC token. Okay, let's just go over what the borrow APY against the supply APY is on this side. Okay, so the borrow APY is the APY that you have to pay for borrowing said asset. Okay, so in this example, I am borrowing USDC coin, so I am paying an APY of 3.66% for borrowing that asset. However, I am getting back a percentage of 52.17% in the form of the TONIC token for borrowing this asset. So if you look at this discrepancy here, yeah, you can see that I am paying 3.66%, but I'm getting 52.17%. Now I am getting it in the native TONIC token, so it is relying on the price of the TONIC token. But that doesn't worry me at all, because I'm not putting in money for TONIC token. I'm just getting it as an extra incentive for borrowing the USDC coin. So just take a closer look. We're going to look at the dashboard here to see what I'm actually doing. So we see here borrowed assets, and you see USDT here at the top. We're going to go into that a little bit, later on. We see here the crypto.com, I borrowed, or I supplied 80 crypto.com tokens. So I'm receiving again a 1.61% APY in crypto.com, and I'm receiving a 56.66% in the native TONIC token. All these numbers fluctuate, so you may see it change from screen to screen here. So once I did that, I borrowed against this crypto.com token $20 in USDC. Okay, and again, I have to pay back 3.66%, or that's the APY for borrowing, but I get back a 47.94% in the TONIC token. So what did I do? I didn't just hold on to that USDC token. I went back here to BVS Finance. I selected USDC, and then I wanted to swap it out into USDT. So I did the one-to-one swap out so I can get $20 in the USDT token, which you can see here. I went back into the Tectonic protocol, and then I supplied this USDT token. So now I'm getting an APY percentage on USDT of 2.05%, and I'm getting back an APY in the form of the TONIC token of 23.69%. So this $20 in USDT, I don't own this. This is from the borrowed asset, but I am able to supply it back into this protocol and earn a percentage on that supplied asset that I don't own, which I think is gnarly. I'm going to be having USDT in my wallet now, which I didn't before, but it's going to be all free just for supplying this asset, which I don't own anyways. So I think that's pretty cool to me. And I'm earning an APY percentage in the form of TONIC for doing all three of these things, for borrowing assets and for supplying both these assets. Let's just take a closer look at, the bad side, okay? Because, I am borrowing an asset, so I do run the risk of being liquidated, okay? So we look here at these loan to value details. I'm supplying $47.30 of collateral in the form of crypto.com token. I am borrowing $20 in the USDC token. To get liquidated, that's the most important thing out of all this, okay? But to get liquidated, the crypto.com token would have to fall by 47.14%, okay? So if a black swan event happened tomorrow and all of the crypto markets crash, I do got to keep an eye on this so I don't, get liquidated, okay? So it is something that I do got to keep in the back of my mind. So that's one of the things I do got to, be worrisome of. If crypto.com token falls, I do have to, unstake and take my funds out so I don't get liquidated. Another thing that I got to be worrisome of is this APY percentage of the borrowed asset, okay? I don't want this APY percentage to fall below this top one here, okay? I want to be making more than the percentage that I'm paying out. If that ever flips or it gets too close, I will take this borrowed asset out, which will inherently take out this USDT, but I won't be paying out more than I'm bringing in. And as you see here, the volcano that I showed in the previous video is somewhere in the middle here. It is obviously better to have this indicator bar all the way back here, but I do have a $14.15 balance that I could borrow more, but to keep it so I don't over leverage myself, I'm going to leave that to not being borrowed, and I'm just going to be making the rewards on what I already got in. So that's the video for you guys. What do you guys think? Are you using the Tectonic protocol itself? Did you buy the native token upon launch? And if you did, are you up? Are you down? What is your plans if you're down? I'll be interested in hearing, what you guys' plans are, and interested in hearing, what you guys did upon launch. Did you take the advice of the Tectonic, developers, or did you ape in and, hopefully come in right here and, make some gains? Whatever your thoughts, leave them in the comments down below. Thank you guys for watching this video. Again, subscribe if you're new here, as I do talk about stock, I talk about crypto. So if any of those topics, interest you, hit that sub button. Like this video if you like this video. It does help me out. I don't know anything about that YouTube algorithm, but it does help your boy out, and I do appreciate it. Thank you again, and I'll catch you in the next one.